So I am going live today and I'm doing something a little bit different because I want to make sure that my LinkedIn and YouTube and all of that was working. And so just let me make sure this is live and Facebook. All right. So today I am going to be talking about estimated quarterly tax payments. So what are quarterly tax payments? Who has to pay tax payments and all of that good stuff? Because tax season is right around the corner and I'm sure that I came on. So for this daily topic, this is what, and we are also, because we're in 12 days of Taxmas, we are going to be discussing our amazing sale today. And so today it's going to all be about tax prep. So we're in the same realm of tax prep. Yesterday we talked about tax filing and the importance of bookkeeping. And so let's get started. So who am I? My name is Atia Brown. I am the owner of the Savvy Accountant CPA firm, where we are savvy at solving your tax issues. And we have a goal to save our savvy family $1 billion in tax savings. And that's what we intend to do. So today's daily tax topic is going to be dealing with quarterly taxes. What are quarterly taxes? Who has to pay quarterly taxes? Essentially, I like to give my explanations in parallels because, that's what I like to do if you guys are not new to me. And so when we are coming from the world of an employee, you are used to getting a paycheck every week, every 2 weeks, every month, and you have taxes that come out of that paycheck. Well, the news is the government works on an earn and pay system. So you earn income, you pay taxes, you earn income, you pay taxes. So a lot of times people think that the government is only collecting tax revenue when you file your tax return, and then you get that balance of you got to pay or you owe or you're getting a refund, all that stuff. That's not the only time the government is collecting tax revenue. So the government is actually collecting it throughout the year and is an earn and pay system. So when you're an employee, your employer was responsible for submitting those quarterly payments on your behalf. So all of the withholdings that were coming from your paycheck, your employer was responsible for collecting those, keeping those safe, and then remitting it to the government every quarter. So the earn and pay system was happening every quarter when you are an employee. So now that you are on a different side, you are now the employer because you have your own business as a small business owner. You're required to submit what we are calling estimated quarterly taxes. And the reason that it's estimated quarterly taxes is because it's submitted quarterly. So the government allows you to earn income, then pay those taxes quarterly. And it's an estimate because you true it up at the end of the year. So when you file your tax returns, that's when you actually figure out the actual number that's owed or the actual amount of taxes that need to be paid. So the payments in the quarters throughout the year are estimates. So who needs to pay estimated quarterly taxes? If you are a small business owner and you have a single member LLC or a sole proprietor and you're filing your tax return on your 1040, so your business return is part of your personal return. If you owe $1,000 at the end of the year, that means that you are a candidate who was supposed to be submitting estimated quarterly taxes throughout the year. I know that sounds like, well, how would I have known? Typically, you would know because you would check your prior year. Did you owe $1,000 in taxes prior year? Chances are I'm probably going to owe around the same thing. So that's one way you can check. Also, following your bookkeeping, ensuring that you know what your numbers are saying, ensuring that you know what those numbers are going to mean for tax season. That's going to indicate if you should be submitting estimated quarterly taxes. So if you are a small business owner, an individual, and you owe $1,000 in tax payments, then you are a candidate. If you are a corporation, then your amount is $500, and that's how you know that you should be submitting estimated quarterly payments. Next, we want to talk about how to calculate estimated quarterly payments. How do I know what I need to be submitting? So there are a couple ways that you can do it. And the first way, which is what I call kind of like the retroactive way, it's looking at your tax liability of prior year. So when you filed your tax return last year and you saw how much taxes did I owe, like do I have to pay for that current year? And then you take that number and you divide it by 4, and that's what you would submit for your estimated payments the following year. So we just finished the 2022 tax filing season, even though we're in 2023. So when you filed your 2022 tax return, you should have received your tax return, the face of your 1040, it tells you what you owe in taxes. And some software is going to tell you what they think that you should be submitting for your quarterly in 2024. And so you can use that. You can use that to see, okay, I owed this amount. We're going to divide that by 4. That's going to be our quarterly tax payments. Another way you can do it is basically understanding your numbers and knowing what your business is doing, and then submitting your estimated payments based on what your business is doing throughout the year. There are penalties associated with not submitting your estimated quarterly taxes. So when you file your tax return at the end of the year and you true it up and you see what you owe, if you were our candidate that was supposed to be submitting estimated quarterly taxes and you didn't, there might be a penalty that's imposed. The penalty is not that large, so I don't want you to panic and think that it's something, but if you owe more taxes, obviously that penalty is going to be increasing, right? So the government waives that penalty if you, one, submit 100% of what your tax liability was in the prior year. So if you take that formula where I said whatever you owed that year in taxes, if you divide that by 4 and you submit that quarterly, then you wouldn't be hit with the penalty. Or if you submit with your quarterly payments, if you submit 90% of what your current year tax liability is, so if you were great at estimating what your tax liability should have been and you paid it quarterly and you hit 90% of what it turns out you actually owed in taxes, then you also don't get dinged with the penalty. So it's always best, because you might not know what your business is going to do. You might not be that sophisticated to figure out what the 90% is going to be. So it's always best to hit 100% of what your tax liability was the year before in the current year estimated taxes. So I hope that was helpful. I know I speak fast, so if you guys have questions, let me know at the end. Next, let's talk about the deadlines for the estimated quarterly taxes. So the deadline is going to be the 15th of the month following that period. So the first period is going to go from January 1st to March 31st, and that deadline is going to be 4/15 of the following year. So we're talking about if you are in the current year, so obviously we're at the end of 2023 now, but going into 2024, your first quarter estimated taxes for 2024 would be due on 4/15. Your next period is April 1st to the May 31st. That would be due the June 15th. Then you have the June 1st to the August 31st. That would be due 9/15. And then you have the October 1st to the December 31st. That would be due 1/15 of the following year. So 1/15 that's coming up. So 1/15 of 2024, that would be the deadline for your Q4 estimated quarterly payments of 2023. You guys get that? I know the numbers going back and forth, it's a little confusing, but January 15th is going to be the deadline for your Q4 of the previous year's estimated quarterly payments. All right. And some tips for managing cash flow. So here's a trick that well, not a trick, but a tip that I tell some of my business owners. I know a lot of people are, you hear profit first when it comes to your business taxes. And if you don't want to implement profit first, you don't have to implement it with all of the accounts that are suggested. But one thing I do tell people is, in order to, be ready for taxes that come due, not incur additional penalties or interest, you need to have cash on hand to pay those tax liabilities. So a habit that you want to get used to is creating a separate account for taxes. And what I tell my clients is to have that separate account for taxes and have a portion of all of your revenues go there. And so we call it the magic rule of 30. It doesn't mean that your taxes are going to be 30%. It means that you're going to have 30% in that account. So when you actually have to pay your taxes, you have the cash flow to cover it. Because one of the main reasons that people are overpaying in taxes is because they get a tax bill, they have to pay it, they don't have the cash on hand to pay it. So now they have interest and penalties that are accruing on that balance. So they're overpaying because if they would have had the cash, they wouldn't have had to accrue the interest and penalties. So if you have that tax account that's available, that's one way to manage your cash flow, to make sure that you have the cash on hand to pay the tax bill when it does become due. So I hope you guys enjoyed that tip. You don't have to follow profit first to do that tip. You just have to have a separate account that you're going to have for your tax payments. And that could be these quarterly tax payments, your income tax payments. That could be payroll tax payments, because we, like I've said many times, we pay more than just income tax. there are a lot of different taxes that you pay. So you want to make sure that you have the cash on hand to pay those amounts. So if you guys have any questions, let me know in the comments. But I did want to get to our day 2 of Taxmas, our 12 days of Taxmas. And because we're talking about taxes, quarterly tax payments, what we've done in the past few years is, because there's typically price increases in the new year for services, we tell our clients that yesterday's price is not today's price unless you book today. So what we do is we give our clients the opportunity to book their tax prep for next year, but they lock in this year's tax prices. So you will be able to get your tax prep, you sign up for it, and you would pay for it today, but it's going to be at their old prices. So the prices that you paid for your 2022 tax return, that's what you're going to be paying today. And so our day 2 of our 12 days of Taxmas is locking in your tax prep pricing before the prices change. The prices are going to go up. We do have an increase of approximately 18% per level. And so you can save that if you sign up today. So if you guys are on our mailing list, you already got that deal. That was sent out to our mailing list. But on our daily tax tips, that is going to be what we talk about today. So make sure you lock in your prices, because 2024 is going to be here before you know it. Prices are going to increase. So lock in your prices for tax prep at today's price, which is your 2022 tax return prices. And you can lock those in, get that signed up so you guys don't have to worry about it. You'll be prepaid. And then once the tax season opens up, you will get your taxes filed without worrying about any increase in pricing, because inflation is here. Inflation is a thing. Prices are going to be going up. So if you guys want to lock in today's price, make sure you check out our day 2 of our 12 days of Taxmas. You can DM me 12 days or Taxmas, however you want to do it. It's 12 days of Taxmas. You can DM that, and then you'll get the link sent directly to your DM. If you're on our mailing list, check your emails, because that email went out. And so we definitely look forward to having you guys as clients again for this year with the Savvy Accountant, so we can help you guys get your taxes filed to make sure your taxes are accurate, filed timely. And that's our live for today. So if you guys have any questions, let me know in the comments and I will get back to them. But yeah, that's going to be our live today. We talked about quarterly estimated taxes, who has to pay it, what amount you have to pay, how to avoid penalties and the deadlines. And we talked about a tip so that you can always have cash on hand ready for your quarterly tax payments. Let me know if you guys have any questions. I will see you tomorrow. Bye.